ICG-Longbow Senior Secured UK Property Debt Investments is a company which was launched in 2013 with the aim of delivering a stable and attractive level of dividend streams, as well as capital preservation and a certain modest degree of capital gains in the longer term. It aims to achieve that by investing in a diversified portfolio of good quality, defensive and predominantly fixed-rate senior secured UK real estate loans. Under the current investment policy, it seeks opportunities in the range in terms of loan-to-value of up to 75% at portfolio level, although in case of individual loans, the LTV level may be up to 85%. This compares with the current average across the portfolio, as at the end of October 2018 at 62%. Current portfolio offers a coupon rate of 6.25% per annum, and it may grow further following new investments and loan extensions. What is also important, ICG-Longbow SSUP is targeting the whole loan space, which with an expected return of around 6 to 10% per annum. ICG-SSUP's investment manager is part of Intermediate Capital Group, which is a specialist asset manager listed on the LSE with around 30 years of experience across private debt, credit and equity. The fund manager's expertise includes both debt investments as well as the UK real estate markets, which is facilitated by a senior debt investment team. Together with the wider network of the real estate arm of ICG, this facilitates the deal origination process of the business. What's also important, the investment manager puts strong emphasis on risk mitigation and stress testing the borrower's business plan in order to facilitate capital preservation and the resilience of income. This is particularly important given the hold-to-maturity approach of the company, as well as investments in the higher LTV space. Following a more cautious approach of UK banks in terms of their lending activity in the aftermath of the financial crisis, their activity is now picking up, and together with new entrants to the markets, this has put downward pressure on spreads on senior real estate debt. Having said that, the investment manager of ICG-SSUP still sees a significant amount of opportunities, especially in the regional markets, which seem to be undersupplied in terms of debt capital. These regional markets are also a lower supply in terms of floor space, given the limited development over several years, and also the fact that some of the vacant offices were converted into residential property. What is also worth mentioning is that the regional office market should be more resilient to the Brexit-driven relocation of jobs in comparison to London. And finally, even though the investment manager acknowledges that we are currently approaching probably the end of the cycle, it has a relatively defensive positioning of the portfolio. Firstly, because it's focusing on senior secured debt, and secondly, because it is putting much emphasis on the analysis of the business plan of the properties and their cash generation prospects. ICG-SSUP's portfolio is currently undergoing some repositioning, as there are several loans which have approached or are soon to approach maturity. This includes two sizable loans which are characterized by a lower coupon rate than the rest of the portfolio. Some of those loans are being extended while others are being repaid, and the company has already started to redeploy the cash received from repaid loans. A good example of that is the recent advancement of the £15 million loan to Bitesize Hotel Group, which will be accretive to the weighted average coupon rate on the portfolio. What is also important is that new investments are facilitated by a new loan facility of £25 million with Oak North Bank. And the company is also considering a new £25 million investment in one of ICG-Longbow's private funds. ICG-Longbow SSUP's investment manager is entitled to a management fee of 1% of NAV per annum. It's important to note that if the company invests in any of ICG-Longbow's private funds, there is an arrangement to avoid double charging. In terms of the dividend, the company is aiming for a quarterly distribution of 1.5 pence, and the company was able to consistently deliver this level of dividend payments since inception on an annual basis, which translates into a dividend yield of around 6%. Under the current investing policy, the maximum gearing ratio of the fund is 20% of NAV. And finally, the shares currently trade broadly in line with the company's last reported NAV.